Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, February 2nd. Mike Boutros with you on the horn. Hey, Jay, Steve, Ted, great to see you guys all in the room. Lots of action early in the week. So we're getting that pump in the dollar, which looks all right. Kind of tired here into the open. We'll go over DXY levels, Euro levels with a break lower, Sterling sitting at support, dollar CAD, dollar yen pushing into resistance, Aussie dollar, Kiwi dollar, and good old look at the SPX. Looks like we broke near-term downtrend resistance here, so a little bit more to go there, but let's jump right in. So we went over this yesterday in Daily FX. Hopefully you guys were there, but a quick look at where we are on the weekly charts. The level of focus for me this week is 91.01 to be exact. That swing low from 2017. You got the lows here from earlier last year before the inevitable break in November took us lower. Also trend or slope resistance, this consolidation pattern, a little bit higher. Key resistance 91.92 into 92.28. That hasn't changed. Yearly open support, bullish inval 89.93. So levels are mapped out pretty well on the weekly charts. For the daily, working on our third consecutive daily advance. It would be 4 advances within the last 6 days. And here's the push higher. Almost 2-month highs, not quite there right yet. Momentum right at 60. This is where, if we're gonna have some sort of fake out failure, we would see it. Not my favorite scenario, not what I'm looking for, but that's the risk today if we buckle back below 91. So I really want to see this hold. I would love to see momentum mount 60 for the first time this year, specifically the first time since September, and would certainly be encouraging. Reminder that a simple 100 extension, if this is going to just make a correction, 2 equal legs off the low, and then we plummet lower, that still takes you into 91.79, 91.74. So broadly constructive here, but wanting to see this thing pick up a little bit more pace. Here's what it looks like on the intraday chart. So as far as the scalp is concerned, as the near-term targets are concerned, we're right on track. Here's what it looked like into the start of the week. We wanted to stay constructive above 90.27. Didn't even get a test of that. Here's the rip higher. Took out 90.78. Here's 91.01. So all things held constant. Near-term support now 90.78. Okay, right back there. Weekly open support. I'm sorry about that. Comes in at 90.53. And essentially, I don't want to see anything lower than the weekly open if this is going to hold, okay? Top side, 91.32, 91.30, 2017 low day close, a 38.2 retracement of the drop. And again, that 100's all the way up at 91.80. We'll talk about that if we break, but right now the initial focus is right here at this pivot near 91.30 on the upside. Questions on DXY. We're pretty limited on event risk until we get into Friday's non-farm payroll report. Again, expecting a pretty weak read there as it is. 50,000, which again, after last month's negative 140 print, should be interesting to see how the market reacts to that. But we're pretty clear on headline news event risk, at least from a data standpoint in dollar here. Questions? That is number 1. Here's number 2, Euro. And here's what Euro looked like into the open of the week. You know, the focus here was whether the breakout of this multi-week, multi-month downtrend was legit, right? Because we got a slit up here, which kind of faked everyone out, broke lower. We probed, that failed. Here's the break. If this was legit, we wanted to see support ahead of 120, top side 21.89, right? Well, here's Euro now. The break was not legit. There was the drop right into support. That failed. Once that gives out, you're right on resumption. So our swing trade's working out well here. You got 2011 as your next major support objective. That's September highs. It's also going to be the 2018 objective yearly open. Converges on slope today. Okay, so this pitchfork, while it was very short-lived, did help us get a little bit clarity as soon as we broke that level, looking down into 120. Not involved in Euro, as regretfully as that is. Just couldn't take that trade early in the week. But Looking for a reaction, 120 is the level to look for. Close below 120.05 keeps this thing on track, but we'll have to cross that bridge when we get there. Near-term resistance, 2092. Bearish invalidation at the weekly open, up at 21.28. Notice that we had a little bit of a consolidation pattern here. Only had a 2-point touch, 3-point touch if you count that, but you had a 3-point touch on the bottom before it breaks. So if this near-term consolidation is legit, we should get some follow through on this break. Okay, again, euro on the weekly chart looks like this. There's that 120 level. That's the 618 extension from the advance off the lows in 2017. 1, 2, 3. That's the 1618 extension. Caught resistance, break saw acceleration. We're gonna get some support. 120, 40 pips lower. And on the daily charts, to give you the whole picture, here's what it looks like again. Former swing highs, right at the 120 handle. Okay, so that is euro dollar. Again, another one where it just continues to move here. Sterling is the one where hasn't made the move yet, right? We're just sitting at, oh, looks like it's starting to do it right now, but this is a level that we've been watching for a while, 36.58 into 36.75. Brexit gap, 2017 highs, just a level that's been a major thorn in my side, I want to say, for this move. Yesterday's candle was an outside candle, wasn't an outside reversal, but it was an outside candle, meaning it took out the previous day's highs and the previous day's lows. Typically, if this was a reversal, meaning this was an up day, this was a down day, that would be pretty bearish. But nonetheless, the focus for sterling has been on whether this crunch into slope resistance is going to give us anything, right? The break here, if it were to materialize, should be an accelerated pop, should rip, right? Maybe not GameStop status, but it should rip to the upside. All that matters here, again, is the threat, in my opinion, of exhaustion. It's pushing into that uptrend resistance. Momentum has been marking divergence on the last couple of highs that we've been marking. So I'm more inclined to try to look for that near-term pullback in price, but I just don't think the conviction's there, right? So here we are. Again, slope support doesn't come in until about 36.50s. On the intraday chart, here's what it looks like. You got a really clean weekly opening range taking shape. If this were to break here, wouldn't necessarily be an opening range break because it's Tuesday, but it would at least give a near-term focus back towards 36.21. And again, the median line like 36.60s, 36.80s, let's say, to the downside. Key support is still going to be 35. 2018 yearly open, 2017 high day close. Lots of pivots, lots of accelerated move on both sides. Converges on slope later this week. I'm not interested in trying to tempt the long side, even if it breaks, okay? So if this were to rip through, essentially 38 is the upper parallel at this point, 37.80s. You'd likely see, again, 39 pretty quick, right? There's not much to get in the way here. So you got the BOE on tap on Thursday. Interest rates not expected to change, obviously 0.1%, but that's going to be the next major event risk player here for sterling. So cautiously looking lower. Want to see that move below 36.21 and get this thing going. Hopefully, sterling makes a move at some point next couple of days. This has just been a chop fest. So if we clear that near multi-week range there, I think we start to look for some take back here for sterling. Any questions on the British pound? Okay, we are running through these. So number 4, Loonie. Here's dollar CAD looks like. The rebound off of key support, confluence support, 25.79, 26.19. We talked about it for months. We even, on the way down here, guys, remember when this started to bounce, we started to wonder on that failure that we made on the 21st, well, maybe it does need a tag of that key support, and we got it right into the start of the year. Has been the lows of the year, the opening range lows for January. It's the lows. Here's the recovery fizzling out pretty quick, right? What do you do? 29.75 is key support. Low week close comes in at 27.27. Here's what it looks like on the daily charts. So if the breakout is legit, and we talked about this yesterday, the fact that Friday's candle pulled back and held right at former slope resistance turned support, here's the pump higher. I want to stay constructive above 127. That's the 618 of the recent rally, but also the monthly open, the yearly open, comes right down here at 27.13. So a weakness below 27 would necessitate a break of the monthly open, rather the yearly open, keep thinking we're in January still, a break back below slope resistance, now turn support, and that would nullify the breakout. All things held constant, looks like there's still room to go. Maybe a couple of interruptions here, but here's the intraday chart. Nothing's changed from earlier in the week. You know, the same levels of interest are in focus, 127 and 127.35, both levels of which we do want to look for support if this is going to move higher. Okay, so it's the 50 and the 618. Both of those start to converge, or the 618 specifically on slope. That's your bullish inval support. Here's the initial level, 2018 low, October. That's been support so far today, but a push higher is needed to get this thing back up into 129.28. That's up the upper parallel. So looks a little, what's the word? Crunchy here, right? Consolidation. So you're seeing lower highs, you're seeing higher lows, you know, looking for a more definitive breakout. All things held constant, you got a beautiful weekly opening range taking shape right here. Look for a break of that high to validate that push higher towards 29 and 29.70s. Canada does have trade balance information coming out on Friday, but more importantly, it's that double whammy jobs Friday. So you get Canada employment change in line with U.S. non-farm payrolls. Canada is expected to see a contraction of 47.5 thousand jobs after last month's contraction of 52. Unemployment is expected to uptick to 8.9 from 8.8. So keep that in mind as we get into Friday's print. It's kind of going to be like which one's the worser print out of the two. Should help us get some guidance here on dollar CAD. But if the breakout is legit, again, any pullbacks should be governed by 27.35 or 27, both levels of interest for the resumptive move. Any questions on Loonie? Okay, so the abomination. Who's involved there? It continues to climb. It's got the 786 retracement in sight right now, but the 100 is just higher. Here is what dollar yen looked like last night. So real quick, from 1,000 feet up, here's what the weekly chart looks like. We saw the breach above 104.46, which was our line in the sand. That gave us conviction, at least for a near-term breakout in price on the weekly charts. Here's what it looks like on the daily. 100% extension, if we are to complete a correction off the low, it takes you just a bit higher from where we are now, 105.13. Okay, it's the first level of interest. Just higher, I didn't have it labeled, but I was looking at this last night. Just higher, you have the high day close from the November highs. This just higher, 105.25. So give this a 10 pip zone of resistance here. But that's what we're looking at. Look, this is going to be the fourth consecutive day up. It's going to be a rally of more than 1.3% just into the start here. So looking for a reaction here. If we pivot and close above, again, we want to see acceleration if that's the case. All things held constant, though, if you're holding longs, 105.13, 105.25, a region to start looking to clean that up a bit. Here's what it looks like on the intraday chart. So again, you know, the formation that we've been basically traveling on, that we've been carrying since the lows of the year, still in play. Pitchfork resistance right here at 105, just higher is 105.13. Again, that 100%. So that would be two equal legs off the low. Looking for reaction here today. If this breaches, again, I don't really have much until like 105.67, which is just going to be a pivot high that we made back here in the November rally. So it's one of those regions, kind of like Sterling, right? Where we're at resistance, something's got to give. If this resistance breaks, it should be a pretty accelerated run. Near-term support comes in right at that parallel, which comes in line pretty close with the weekly range lows. Let's just call it 104.60s. Ultimately, we would need to break below this confluence region here to put it back on the short side. All things held constant, looking for reaction up here today. Questions on dollar yen? Here's what it looks like on the weekly chart. Okay. Flying through these today. Aussie dollar. So I spent a lot of time with this chart yesterday. You guys know I typically love Aussie. It's been sort of a fake out central here, okay? Is this break that we saw last week, which did close just below or at that 38.2 retracement. I think we closed right there. Here's the dribble lower, but no push, right? No momentum on that move. Pending trigger on the weekly chart. Obviously, this means nothing until the weekly close, so we have to reassess that on Friday. But if this is legit, it's a nice turn from uptrend resistance. First major key level of support doesn't come in on the daily charts till, or the weekly, till 73.85. Really nice pivot. That's actually the low week close, I believe, for May 2017. Okay, so from 1,000 feet up, looking a little tired here on Aussie. Daily chart looks like this. Okay, and here we are testing the lower parallel. So this is just basic trend line off the high, a parallel extended off the low that we made in that first day of January, caught the lows last week. Here we are now. I want to see something. I want to see something. Now, in an ideal scenario, rainbows and unicorns, if we break below this slope on a daily close basis, momentum breaks below 40 on a daily close basis, I think would be the go, right? That would be the conviction turn towards 75 and even lower, to be honest, but that would be the first sort of major region of support on this move. A deeper look at this on the intraday charts looks like this. We've set up a weekly opening range right into the lows from last week, right into channel support. Here's the channels that we were looking at on the daily chart. We're there now, guys. We're there now. Again, a break here, 75.21 is a 1618 off the high. 75 is that 38.2 off the low. Slope is there all throughout the close of the week. So it's all determined on whether we make this break here or not, okay? This region, which was the 38.2 and the 100 off the high, still going to just look at that for resistance. Has been offering resistance in overnight trade. Bullish or bearish in validation. The thing that would shift me straight bullish again or resumptive again would be a breach above 76.79. Okay, a 38.2 of the drop. If we make it past the weekly range highs, if we make it past those swing lows from earlier in January, you know, you risk a larger rally in Aussie altogether. So that's sort of the idea here today. Here's what the scalp looked like last night. So we did drop into this first level. We're there now. Let's look for a reaction to the US Open trade today. If it continues, open range till 75.21 on the downside. Questions on Aussie? RBA is on Friday. So, or the statement rather on monetary policy gets released then. So keep that in mind. But we're pretty much clear for Aussie data the rest of the week. Okay, that is Aussie, number 6. Number 7 is Kiwi. Oddly enough, Kiwi to me looks a little bit more poised. So this is the formation I showed you guys on Kiwi last night. Really quick, Kiwi on the weekly charts, and I did talk about this yesterday in the webinar. This is my problem with it. You know, we popped through this major critical confluence region, really nice pivots in price historically. The breach went right into slope resistance and failed, and we've just been consolidating here ever since. Again, pending support trigger on the weekly chart, not much help so far this week. Here's the daily chart. Consolidation, consolidation, consolidation is all you want to look at here. Lower highs, higher lows, we're looking for the break. Ideal move is you see this snap a little bit further out in the week, a little further out in the month. That break, again, should be a more significant break. All things held constant, we're in a consolidation pattern since the start of the year. This thing is range, contractionary range. So here's the slope I'm working with on the intraday. Obviously, keep this consolidation on the daily chart in view, but if we give this some gradient, and here's a modified pitchfork off the highs, 1, 2, 3. You can see the slope's been pretty decent. The 25% parallel caught the lows, and there's this 75% parallel catching the highs in overnight trade. Your weekly opening range is set right above the weekly open. That's 71.52. Again, favorite scenario would be the break to the lower, take us into this key range, 70.94 into 71.12. Nothing's changed. That's still the level we need to beat to validate a large return here in Kiwi. So some of these commodity currencies have they've just been sitting tight, and I'm not too surprised, right? We'll look at gold next, and then SPX, but we're looking for a more definitive move. Now, a lot of people, guys, I see a lot of questions coming out with regards to all this, the GameStop and Robinhood, and is that going to trigger a market correction? I didn't want to go over this yesterday in Daily FX just because I know it was going to get there's so many people, guys, like 200 people in that room, so it gets kind of crazy with the questions. But at the end of the day, it's not necessarily that GameStop or Robinhood, the one broker, or any of these brokers, even IG halted trading on those assets. It's not necessarily that's going to be the market impact. It's the precedent it sets and whether it welcomes further government regulation. And that's what the market's really moving on. If this turns out to be, all hands on, Congress starts jumping in, we get more regulation, it's going to squeeze out the little guy, little brokerages even more. You're going to put excess regulatory burden on these companies, and that's sort of where this conversation is going. So I'll leave it at that. It's more of a philosophical thing, more so than the impact of radical moves like this in some of these AMC and GameStop trades. But till that happens, okay, we got to keep the powder dry, and we have to make sure that we're staying poised and ready for these moves, because I do foresee some more increased volatility in the days ahead. All right, any questions on that stuff, guys? I purposely try to keep those conversations out of the larger sessions just so we can keep it more concise. All right, so here's gold. And this is going to be one I think, oh, darn it, it started to move already. Okay, well, this is the one that we've been talking about. I put a piece on Daily FX for this yesterday. Here's what the gold trade looks like on the weekly chart. What a move. What a move. So again, here was the yearly open, guys. We posted a massive outside weekly reversal on a fake false break of a critical resistance zone we've been watching at 1909 to 1899. On this recovery, yesterday I was telling you guys, watch out, because we're right at, you named it, former slope resistance again. On a closed basis, never broke. So we're still in this descending channel formation. That's from the weekly chart, right? We've already covered last week's range, and we're heading towards the bottom of that range. Here's what it looks like on the daily chart. Okay. Monthly open resistance right here now at 1875. That's resistance. That's near-term bearish invalidation. Okay. Last week's highs, slope, all right here. Here's the last 2 days, or today and yesterday, on the move lower. If we break these lows, you're still looking on a move into key support. Now, earlier in the month on the drop, or earlier last month on the drop, I told you guys 1803 into 1790, right? It registered a low at 1802, okay, just below that 100% extension before rebounding. The only thing I want to highlight right here is you have this slope confluence that comes in just a hair above, like 1808. This is the same pitchfork we've been following since 2019, 2020 lows. You can see break, inflection, support, acceleration, median line break, false break above the median line. Here's the lower parallel. Here's lower parallel. This is just a parallel of the dominant slope, of the original slope. 1 touch, 2 touch, 3 touch confirms, 4 touch, false break. 5th touch, break, support, support, support. It's here now. Okay, so there's gonna be a whole lot of chop, a whole lot of back and forth. People are gonna get faked out, but keep your eyes focused on that 1790, 1803 level. That's what we need to clear to mark a much larger turn in gold. I don't know if we get it or not. I just know that in the near term front, I'm looking for a little bit closer of a drive down into 1800. Here's what it looks like on the intraday chart. Again, this is the 2-hour. And I guess I can just show you guys. Again, here's what it looked like on daily effects. This is what it looked like last night, right? We noted this region right here as resistance. With 1876, that's the level of which if it breaks, we're wrong, right? The bearish level is at that point nullified, and you're looking for 1809. So really nice stretch. Love the exhaustion and overnight trade. We broke below weekly open support at 1848. That's now resistance. Here's your first tag of the 618 at 1830. If we break below this, again, that's the level we need for that run on 1800. So this may be the weekly opening range right here, guys, if this holds into the US trade session today. If that is the case, it's still a clean setup, right? It's still a clean setup. So looking to see if we get that downdraft near 1800 in gold, near term resistance 1848. Want to see that hold. Questions on the gold trade. Now, this is one where, I was just, and I hate just to bring up ancillary anecdotal data here, but, I was watching CNBC this morning, and they were talking about basically the market sentiment, and there was one commentator on, I won't mention her name, that she basically is calling for a larger correction in price, in markets, general stock markets, generally speaking. If that is the case, okay, the downside for gold may be limited. And that's one of the things that I've kind of been focused on. While the technicals do look and suggest that we see that move lower, the biggest threat, guys, in my humble opinion, is a severe or dramatic change in market sentiment. Now, we're not there quite yet, but there are hints starting to surface where it could look like, at the end of the day, investors could take a back foot and just start offloading a little bit here. So keep broader market sentiment. Watch the stock, the S&P and the broader indices for the tell here. All things held constant, looking for that drive lower. If we do take a big spill in stocks, that could be the interruption. But here's what stocks look like now that we're talking about it. Here's the SPX, and I showed you guys this yesterday in the webinar. We talked about it, about the setup that we had published here on Sunday night, essentially highlighting that major key support right there. That's exactly where this trade grounded before rallying. Now, I told you guys on this trade last night to be mindful of these two regions of resistance. 3784 into 3792, beautiful confluence region of the 618. You have the 618 extension and the 618 retracement. The extension off the lows, the retracement off the highs, and the former swing highs from the January opening range. All were right here, right? It's this region or this region, 3820 to 3827. This would equal 2 equal legs off the low. And, if this whole thing is just a bear market recovery, that's where we should look for more significant resistance. Okay, and I told you, if we get up there, look for a larger reaction if we get up there. So it's important. It's important here as we head into this 3820, 3827 level. There it is. This is going to be what I'm watching today on the push higher. If you see momentum here is kind of flattening out right around 60 or just above. So you can already make the argument that you're on set for a near-term divergent signal if this kind of holds a slow momentum grind higher. Above 3827, and you're essentially talking about resumption. Okay, so don't get too excited. We got. I didn't like the fact that I saw that lady on CNBC today saying that she's bearish markets because again, we don't want to be necessarily always with the consensus on these things, especially when it's the call or the onset of a correction. But that being said, this is your focus for today. Here, let me shade it. This is your focus for today. Okay. So no change to any of those levels from last night. Okay, well, I ran through that today. Any questions on your end, guys? Jay, Steve, Ted, anything that you want to look at that we haven't touched on yet, feel free. CAD looks basic trendline resistance from the highs of October. High break here, going to be some trigger, more upside. Jay, which one now, dollar CAD? So correct me if I'm wrong, Jay, you're talking from the October highs? This October high? So you're talking about this? Is this a breakout? So all things held constant, Jay, yeah, we're treating it as a breakout. I didn't even need that line because again, the slope we've been following is suggestive that this is a breakout, right? The whole question is not, is it a breakout or not? We've already confirmed that it was a breakout because we broke through, tested former slope support as resistance, and here's the resumptive move. The question is there more to the breakout? Okay, because this could be the breadth of the correction, and then we're in the resumptive move. So we need that breakout to start to gather pace. You're talking about the weekly charts. Here's what it looks like on the weekly. Yeah, I mean, on this one, it's going to show like even a cleaner break, right? Yeah, I see what you're saying. It's the same slope, Jay. Same slope. I just can't get married to these kinds of trades where it's a breakout and 3 weeks later, Jay, I'm still looking to validate that. Oh, you're talking about from the March high. Oh, well then, my friend, let me. Ah, I stand corrected, my friend. Yes. Yeah. To put it simply, Jay, yes. If we close this month above this, I would call that a breakout. Why? Remember, 2-point touch is always speculative, and this is something, guys, I see even senior daily FX guys and guys who've been doing this on Twitter that I've known for years. They tend to run with this frivolous thing where any 2 points make a trend line. That's true, guys. Any 2 points can make a trend line, but it's the third that confirms it, right? I can draw trend lines off any 2 highs in the world and I'll run with that slope. I have no validation until the third touch. For me, that's what last week was. So you have 1 touch, 2 touch, third touch confirms. If this week breaks out, absolutely, Jay. I would interpret that as a simple trend line breakout. Absolutely. Now, again, we're back on the weekly charts. So, Jay, we're going to need a weekly close to necessitate calling that breakout on this trade specifically. I'm going to remove it just for clarity here. Let's see what it looks like on the daily chart. Whew, even cleaner. All right. I like it. Jay, thanks for throwing that in there. I like it. You're there. Not only does this confirm the 1, 2, 3 touch, but actually the last 2 days you can confirm, or you could suggest that all 3 of these are touches of that trend line in a hold. So yeah, absolutely. If we close a daily close, this will bring in that close conviction a little bit earlier because we're looking at the daily chart, right? So if we daily close above this, yeah, I'd be on tap 29.75. Not bad. So I suppose if we copy this here, she's a beauty. Not bad, Jay. Nice call. Yeah, you're more than welcome. Thank you. Okay, any other questions, guys? If not, we'll wrap it up here. Again, the event risk for the week, I just want to, keep your eye on obviously the BOE, but more importantly, it's going to be that Friday print. We'll meet again on Thursday to go over all the setups we'll be looking at heading into NFPs. Stay nimble this week. There's a lot going on. We're just opening up the February range, so let these ranges play out. Keep some powder dry, and I think we're going to get some excellent, excellent moves. The markets are primed for volatility. A lot of people yesterday, and one other just side note, a lot of people just keep marrying themselves to the VIX. Guys, the VIX is reactive. I could say this until I'm blue in the face, and I just feel like people aren't, absorbing it. The VIX is reactive. It's not forward looking. If the market spikes today, VIX will rip right through the roof, right? I can't keep looking at the VIX and saying, oh, well, the VIX is moving lower, therefore, no. We're in a market environment where everything is hypersensitive. You're getting tons of headlines, and I really think we're on pace for some really, really nice moves, either this week or heading into next week. Keep your eye on this SPX choke point into 38.20, 38.27. Want to see something happen there today. All right, guys, best of luck trading. I will see you all on Thursday. Till then, cheers.